Hey there, folks. When it comes to investing, does fortune actually favour the bold? Does it favour the brave? I'm Aaron Young. Investment Insights starts right now. Great to be with you as always. You're watching Investment Insights presented by The Investor's Way. Each episode we dive into the world of wealth creation, providing practical tips of how you can master your money. Now, the biggest barrier to building your wealth is the fear of uncertainty. Today, we reveal the price of playing it safe and how it could be holding you back from your financial fortune and future. To help us all break it down, welcome back to Andrew Woodward from The Investor's Way, and of course, my co-host here. Great to see you as always.
Thanks for having me back again, Aaron.
There are a lot of people who it feels like they're waiting for permission, they're waiting for something to happen, they're waiting for a reason to jump in. And as that wait happens, or maybe even fear, the world's moving on and quite often the markets are moving up.
Absolutely. The world and time stops for nobody. And from an investor's point of view, can be very, very costly if you're sitting on the bench waiting for the perfect time to invest.
Yeah, I mean, it's kind of like buying the iPhone. When do you buy your first iPhone? Is it this model? Is it the next model? Are they going to come up with something the one after? You never know. You have to jump in or not jump in. How do you know when the right time is if it's not uncertainty?
Yeah, yes. So the right time is today. If I draw on a Warren Buffett quote, as I tend to do, the greatest time to plant a tree is today. The other best time was 50 years ago. It's the same with investing, and that's why he repeats that quote so often, is that you just got to invest today.
But Warren Buffett isn't at the moment. He's pulling his money back, right? He's being a bit careful, would you say?
That is, I guess, what we're hearing as part of the story, but what we're not hearing is he's just gone and bought a couple of companies, including Domino's. So he
just quiet weekend. I mean,
that's right.
I ordered from Domino's over the weekend. He bought it,
and he knew that because that's why he invested. But yeah, he has pulled some money out. It's led to a whole lot of people saying, "Is that sending a signal?" But unfortunately, it's not a signal. He's just freeing up cash to go and buy.
Oh, you see, that's why I love you. My Instagram is full of financial influencers. I don't even follow them. They seem to turn up though, saying Warren Buffett's pulling all his money out. You should be doing the same as well. He is pulling his money out, but what you're saying is essentially just switching investments. He's saying that isn't working. This is.
Yeah, he's looked for opportunity and where he sees growth and where the economies are going and all those things that he uses for his decision-making process, and said, I can pare back some of my investment in a company like Apple and put that into something else.
It feels like when you're using the word uncertainty, and your concerns about it, is that it's a blunt instrument, isn't it? Yeah. If you use uncertainty as a reason to do nothing, then you're not achieving anything. Whereas I would imagine, and I won't put words in your mouth, but be uncertain about the things that are worthy, but be certain about the things that are worthy as well.
Absolutely. And the thing that a lot of people don't understand when it comes to uncertainty is there's risk in everything.
Yeah.
Even leaving your money in the bank in cash has a risk attached to it. And as a result, you get an appropriate return. Based on that risk. So no return, no risk, no return. So even that small return that you're getting from having your money sitting in cash has an element of risk to it.
Well, it's like a safe harbour, great to be, but you don't get anywhere if you sit in the harbour, right?
Yeah.
As a ship, talk to us about prioritising safety too much and what it can actually lead to as a negative.
Well, it's that lost opportunity and that lost cost. So we've spoken about it before, in that in the last 12 months, stock markets have grown dramatically. Crypto prices grown dramatically, property prices have continued to grow. So if you sat on the sideline because of that fear of uncertainty and not knowing what's going to happen tomorrow, and newsflash, nobody knows what's happening tomorrow, let alone in 1 year or 2 years.
I'm going to throw the script out for a second, Andrew. Not that you give me a script, of course, but I want to point out, I'm just thinking of this, I'm thinking about parents, I'm thinking about people I know. You and I often sit here talking about investing as if it's a single person who invests. What if you're in a relationship with someone that you have spent your entire life paying off that house together, and one person wants to do something, maybe sell the house because the market's looking in one way, or one wants to invest in crypto, one wants to do nothing, one wants to keep the house, the other one wants to sell. What's your advice when you're in that situation? Because as you know, a lot of people, they are relationship investing.
Yeah, that's a great question because it comes up all the time. And I've written and spoken about the fact that women are better investors than men on average. Over 1% better off being a woman. And that I guess that tug of war between wanting to do something and not wanting to do something happens a lot in relationships. And so the core to overcome it is obviously having the conversation and then understanding what is the end goal. And if you can get comfortable with, well, this is where we both want to be in the long term, then you have to create the path to get there. And if one is like, I just want to pay off the house and that's it, that will clearly demonstrate that that's not going to get you to that end goal if you have bigger ambitions. So then you have to have that conversation, well, if that's not going to get us to the end goal, what will? And then you can start talking about the type of risk tolerance that the two of you are comfortable with, that you can then enter those investments based on that risk tolerance. So for example, you and I have spoken about my lack of, I guess, deep understanding of the crypto market and therefore the faith of where it may or may not be in time.
This is why we'll never make a great couple.
Well,
I might
yeah.
add. The only reason.
Yeah.
But, that's
So I wouldn't necessarily invest in crypto
yeah.
because it's beyond my risk tolerance.
Yeah, but okay. So, I mean, these are personal questions, and there are a lot of people out there where it might be a partnership where one wants to invest in crypto and the other says that is way too risky. And how do we manage that? We talk about uncertainty and paralysis, but that can go into so many things. I mean, if you've ever sat down with my partner and tried to find something on Netflix, we're never going to get a house if we can't choose what to watch at night, right? There's a lot of paralysis that happens in relationships, and that must flow into these relationships too. Is that something that needs to be sorted out on the first date? Or when, as you say, you speak to a lot of people in this situation, what is your advice? What works?
Yeah, I don't know that it has to be the first date. Probably by date 3, you want to have that conversation. Yeah. But it's, like I was saying, if you can map out the destination, you then got to work out what will get you there. And what the two of you then become comfortable with what that path looks like. So it doesn't have to be one asset class. And I recommend it's more than one asset class. So then just working out how those asset classes will get you to that destination. And both sitting there and going, I'm comfortable. And like most Aussies, if a key part of it's property and you already have one, why not go and get some more? Yeah. That will get you to that destination.
So diversification can help reduce the risk. Yep. And I would imagine in a relationship setting, as we're talking about at the moment, you can diversify, meaning that each partner can actually also have, on top of the asset that they might have as an investment together, their own investments, their own opportunities that they don't have to agree on, that they're using their own money to be able to go into too, right? Yeah,
look, I've seen examples where couples have had their own pots of money that they can do whatever they want to do with. And so let's say it was in a scenario of my relationship and I can't get myself comfortable with crypto, but say my partner could, then go and put some money into crypto. I know it's not the whole thing. And so it's still going to get us to where we want to be, and both parties can be happy with the risk that we're taking.
Well, uncertainty is pretty normal. I think that over the past 4 years, you'd be crazy to not have been impacted by it emotionally. Obviously, we've had lockdowns in developed countries. We have had changes of government and moves to protectionism, which people will be looking at the market and worried about as well. How can we utilize that term that we often talk about here about making sure that you've got a long-term strategy? How can thinking long-term help you to overcome the paralysis of uncertainty?
Yeah, and I think you're diving into diversification again, which is great because we want to spread our risk. And so one of the, in that relationship conversation, the reason that one person may not like one asset or another or one path to another is that risk tolerance that they are comfortable with. So diversification enables us to de-risk our strategy. Because when stock markets are doing well, other markets won't be doing as well. When stock markets are not doing well, these other markets will be doing well, gold and silver, things like that. Yeah. So having that balance and that diversification de-risks the portfolio, which then enables the couple to be a little bit more comfortable.
And it's that hesitancy, right? It's the hesitancy about jumping in that makes us uncertain as well. What advice would you give people who are hesitant? I know that you don't like to follow the financial news in terms of the opinion stuff. How do you determine what is a trend, what is a fork in the road, and things really are changing? I mean, a lot has changed post-COVID, but a lot went back to exactly how it was and at a faster rate than we expected. We didn't think that international travel would ever recover. There was a lot of predictions during COVID about this will never go back how it was. but it has, and in fact, it's become even more popular in many cases. So how do we look long term to make sure that we can jump over that hesitancy?
Look, I've always thought a good crisis leads to better performance as a result of the lessons learned. And when it comes to investing, I love showing people long-term graphs and trends and being able to demonstrate the trends over a much longer period of time. So one of the biggest fears that we've got at the moment from a lot of investors is that we're all-time highs in stock markets. 30 or 40 all-time highs. And
Because what goes up must come down, we're told.
Well, yes, it will at some point, but to what extent, and will it be further down than where it was when it started that uplift?
Yeah.
And that's the thing. And so, so by looking long term, to come back to your question, is by looking long term, we can show people that that long-term mentality overcomes all the short-term noise.
My questions are long-term. You should know that by now, Andrew. I like to do the weave, as Mr.
Somebody
Trump
would say.
Sometimes would say. It is interesting. We often see YouTube videos, memes come up talking about the growth of the stock market, and you look back to 1900, and then you look at 1929 when everyone thought the end is near. The end is here, I should say. The 87 crash as well. COVID, 9/11, these are all things that markets did drop, but they overcome.
Yeah.
And I suppose that's that idea of the long-term investor, which is what you're talking about, right?
The stock market has never failed to create a new all-time high over history. So even when we had the crashes, 87 crash, the 28, all of those crashes, the market has continued to go above that.
Yeah.
And it just, with the way we're set up these days globally, it's going to continue to happen.
What are we going to watch for Netflix tonight, by the way?
Well, I'm still scrolling, sorry.
Andrew, appreciate your time as always. Thanks
for having me.
And a reminder, the program is for informative purposes only. Always do your own research before making any financial decisions. To learn more about how you can master your money, do visit theinvestorsway.com.au. You're watching Ticker. We'll be right back.
You're watching Ticker. We'll have more in just a few minutes.